You need in the previous day's class, previous sessions, what we had, I think 14 days back. You remember, right? Accounting for managers. Yeah. All managers may not be liking the accounting. So accounting for, you remember, right? Any doubt? What we discussed last class? Any doubt is there? Those are online also. 3 types of accounting, cost accounting, management accounting, and financial accounting. That's fine. That's only very basic classification. All right. Anything else? Yeah, that's what we started with. Yeah. Yeah. Classification of account. That is the classification of accounting. This classification of account, real account, nominal account, and personal account. Principles of accounting. Okay. Equation, accounting equation. Okay, that we discussed. Yeah, accounting cycle and internal users of accounting information, external users of accounting information. Good. Then, any doubt? I told you to just read the NCERT textbook. If you read, if you come across any kind of difficulty, 2-3 minutes we can spend on that. Why class 10th is very less? Those are all online. Yeah, fine. Anybody is coming attending today's first class offline? Some faces are there. Few. Madam also. You were there, madam, last class? Okay, okay. Okay, no problem. But you were attending last week, I mean, the previous session online? No. Okay, okay. All right. Any specific doubt? No. Then we can move on to the next area. If I remember correctly, last week we closed by discussing the accounting framework. From transaction to financial statement. That framework we understood, and we just started discussing about the rules of accounting. Okay, double entry bookkeeping rule. Debit what comes in, credit what goes out. Debit all expense and losses, credit all income and gains. Debit the receiver, credit the giver. Yeah, these 3 rules we discussed. Now we have to apply that rule and we have to learn how to make journal entries. I shown you, I think, the journal format, ledger format. No? Oh, okay. So we have to start from there. Accounting cycle. Okay, okay. This we discussed? No? Okay. Yeah. I'm also confused because your friends are there in the next room. I might have told them, or I might have told you. I remember we have discussed this. No? Okay. Maybe another class. So many classes. All right. So this one is the extension of the double entry bookkeeping. Look at this. It gives you the clear understanding of debit and credit of these 5 items: assets, liabilities, equity, expenses, income. Sorry, madam. Yeah, debit credit, which we don't want to pronounce to the engineers, but now we have landed to just understand debit credit. Debit credit is nothing. It's only plus minus. It's a blind understanding. Okay, if you do whatever I'm saying, just opposite, you will also get the same answer. What I'm going to get. Debit the receiver, I'm telling you. You are not debiting the receiver, you are crediting the receiver. At the same time, you are debiting the giver. If you do the same logic, you will get the same answer. It's only a fundamental arrangements what we have, plus minus. See, look at this. In this, assets, liabilities, equity. Capital means equity, expense, income, and loss. Loss or profit. Okay, only these items are there. We have to understand how much profit of the company, how much is the financial position of the company. To know these 2 things only, we have all these rules in place. So to arrive at total income, I should know what are the income. Then only I can total all the incomes. To arrive at all the expenses, I should know what are the individual expenses are there. So just income, we treat as plus credit. Loss or expense, we treat it as minus or debit. Okay. Similarly, assets are debit. If asset increases, that means debit. If you buy asset, we will debit asset. If you sell asset, you will credit asset. Asset is nothing but an outcome of expense only. If you're spending something, that will create an asset. There are two expenses we discussed, right? One is revenue expenditure, another one is capital expenditure. Revenue expenditure is nothing but buying of goods, payment of salary. Okay. Capital expenditure is buying of fixed asset. Okay. So this is giving you the overview of what debit and what credit is about these 5 items. Assets. Assets are always debit. Liabilities are always credit. Income is always credit. Expenditure is always debit. Equity is credit. Okay. Let us come to the journal entry. Yeah, this is what I discussed with you. Yes. So now we are going to see how are we going to make this book called journal. To make this book journal, we should know first the specimen of the journal. I think you have taken this specimen last class itself. If not, take it now. Then take it now. This specimen. This is a book. This is the format of journal. Journal book is looking like this. Okay, journal book. Date column, particulars, ledger folio number, debit amount, then credit amount. This is the format of journal. What is journal? Journal is nothing but a book of prime entry in which the transactions are entered first in a chronological order. If I have less number of transactions, I can just follow only journal. If I have lot of transactions happening in the company every day, then instead of journal, I have to go with subsidiary books, which is not there for us. We are not going to prepare any subsidiary book. We are going to prepare only journal for our course. Okay. It is going to be written in a chronological order. Date column, we have to write the date in which the transaction has taken place. Particulars column, you have to enter the journal entry. Okay. Ledger folio number, you have to leave it blank academically. In real life, they will write the number. Suppose here you are writing on account name. Which page of the journal, ledger, this account is going to be maintained. That page number will be recorded in the ledger folio number. Ledger folio number is nothing but the page number of the ledger of that particular account. In academics, we just leave it blank. In real life, they have a connection with this ledger to with the journal to ledger. So they will be writing this number here. Okay. Then debit amount. How much you are going to debit and how much you are going to credit. The two columns you have to write the amount. These two are amount columns. Okay. Okay, right. Now, how do we record this journal? For that only we have discussed that rule. Okay, rules of accounting. Personal account rule says debit the receiver, credit the giver. Real account rule says debit what comes in, credit what goes out. And then nominal account rule says that debit all expense and losses, credit all income and gains. In a single transaction, we need not or not necessarily to apply only one rule. It may be a combination of two rules. Debit may come from one rule, credit may come from another rule. But some transaction may be just based on only one single rule. Debit and credit both will come from same rule. Okay, let us take an example of some transactions, then discuss one by one how to record the transactions in the books of accounts or in the journal. Look at this. Sumit, there is a person Sumit, he is starting a business by investing cash rupees 1 lakh. So in this transaction, what are the two accounts are getting affected? Now business was not there. Business is now becoming, it comes into existence. Okay, so for business, what are the two accounts are affected? Cash comes into the business first of all. Okay. Sumit is giving the cash. Who is Sumit here? Owner. He is not just Sumit. He is Mr. Sumit, the owner. Yes. Company. It's not company. It's a business enterprise. It may be a sole proprietorship. Okay, that's what we discussed in the beginning, first class, the different forms of business organization. Okay, now business receives money. What happened? Nothing emergency or urgent. Those who are online, please make yourself mute if you are not talking to us. Yeah. Yes. So Sumit starting a business by investing rupees 1 lakh. So business is getting 1 lakh rupee from Mr. Sumit. Okay, that's a transaction. So two accounts are affected. One is cash account is affected. Another one is Sumit account is affected. Sumit is the owner. So Sumit comes under which account? Nominal or personal or real? Personal. Sure. Cash. Cash. Personal account. Why, sir? Debit what? Forget about the rule. What I told you for the three account, real, nominal, personal. What is the explanation? When do you call one account as a real? When do you call one account as a nominal? When do you call one account as personal? Personal account. Person or artificial person? Person and artificial person. So cash is a person. So it is a nominal. Why it is nominal? What is nominal? What is nominal? Don't worry about the rule. You are confusing with both. After knowing what it is, then you have to go for the rule. From the rule, we cannot derive what it is. Okay. If it is America, we have to go keep right. If it is India, we have to keep left. After deciding keep left, keep right, we cannot decide the country. Okay. So please go with the explanation first, then you come with the rule. Okay. What is nominal? When do you call one account as nominal? We only name it. We only categorize it. We only give some nomenclature. That time it is becoming nominal account. I am giving 10,000 rupees to my landlord. What will you call that 10,000? Huh? What is that? Rent. Rent. Forget about account, accounting, accountancy. Common understanding. If I give 2,000 rupees to my son's school, what you will call?
Fees.
Fees.
Yes.
If I give 100 rupees to the cafeteria, that 100
Bill.
rupees becomes my food expenditure. Food. Food. Okay. If I give 2,000 rupees to the bus transport company, then the 2,000 becomes
Fair.
traveling fare.
Expense.
Okay, traveling expense, fare, bus fare. Okay. So different time it becomes different name. It takes different name. So that kind of things are called as nominal. So cash is nominal. So real. Here if I keep 1,000 rupees, it's 1,000 only. If I keep here also 1,000. If I give to you also 1,000. Everywhere. But what you call the transaction, that may be different. But cash is cash always. So it's a real account. Building real account. Furniture real account. Land real account. Computer, vehicle, motor car, lorry. All these things are goodwill. Sorry, patent, copyright. All these things are real account. Okay. So now tell me cash and Sumit. Sumit is a personal account. Sumit comes under personal account. Cash comes under real account. Now apply this rule. Real account rule says debit what? Comes in. What is coming in? Cash. So what is the entry? Cash account debit to Sumit account credit. Okay, Sumit account. When we say credit side, we don't say credit. We just leave it. Cash account debit to Sumit account. But Sumit may be 1,000 Sumits in the world. Later, somebody may also transact with our business in the name of Sumit. Maybe a borrower, I mean the lender, or maybe a customer, or maybe a supplier. So we have to differentiate Sumit and Mr. Smith, normal Smith and our Smith owner. So we have to take capital account. Instead of writing the owner name, we are writing capital account. So Sumit account debit to, sorry, cash account debit to capital account. Suppose there are two owners, Sumit and Sharan, two are there. That time, if you write only one capital, that is a confusing. A joint account. They are jointly doing a business, but they are not interested to have a joint account. Both are different, right? Both of them are contributing 1 lakh each. So what is the entry you will make? Cash account debit, how much? 2 lakhs. Two capital account, A and B. You don't like Sumit and Saran? Yeah. So 2 Sumit's capital account 1 lakh, 2 Saran's capital account 1 more lakh. Otherwise, 2 entries separately. Cash account debit 1 lakh, 2 Smith's capital account 1 lakh, being business started by introducing cash of 1 lakh by Sumit. Again, same entry. Cash account debit 1 lakh, 2 Saran's capital account 1 lakh. If you write simply Saran's account, that gives a different meaning. That Saran is nothing but an outsider, a person. Here also Saran is a person, but Saran is not just a person, he's a owner. Okay, look at the entry. Cash account debit to Smith's capital account. Only one owner is here. But in spite of that, I written the name to have some clarity. Okay, normally simply capital account also do. Simply capital account, okay. But if there is one more person, that time you have to write the name of the owner, apostrophe S, capital account, being business started with cash of rupees 1 lakh. Is it clear? Any doubt in this? So this is called journal entry. The process of doing this is called journalizing. Okay. Come back to the second transaction. Paid into bank. If you want to do business, you have to have a bank account. Bank account you have to have. Okay. So what is the entry for paid into bank? Before that, analyze the transaction. What are the two items, two accounts are affected here? Your bank balance was 0 and your cash balance is 1 lakh. Now both are going to get affected. So two accounts affected here are cash and bank. Now categorize them into real, nominal or personal to apply the rule. Bank is a, why madam? Only 3 options are there. One more you can say. But clarity is important. Bank is a artificial person. So it's a nominal, sorry, personal account. It's a personal, sorry sir? Yeah, personal account. It's a personal account, bank. Okay, cash already we decided, real account. So both the rule you have to apply. Which rule? Real account rule 1 and another one is personal account rule. Personal account rule says that credit the giver, debit the receiver. Who is receiving? Bank is receiving. So what's the entry? Bank account debit to cash. Why to cash? Credit what? Goes out according to real account rule. So the entry is not there. Okay, fine. You have to understand the entry is bank account debit to cash account, being cash deposited into bank. How much it was? 60,000. Okay, next. Bought goods from Mohan on credit. What do you mean by on credit? We will pay later. We are giving promise now, we will pay you later. Okay. So what are the two accounts affected here? Goods account are affected. Goods account is affected. Another one is Mohan account. So far, we don't have any financial relationship with Mohan, but now newly created. We have to settle Mohan in future. So far, we don't have any goods. Yes, sir.
Interrupting you. Actually,
no problem,
some PPT setting got changed, so we are not able to see what slide you are. Okay.
PPT is not moving for you.
Yeah, same here.
Are you seeing any slide now?
It is not the relevant content which you are speaking, sir.
Just the welcome to
Okay, you are still in the welcome. Okay, right. Yeah. I'm sorry, we'll check it. Are you able to see the slide?
Yeah,
Yes, sir.
Okay. Which one you are seeing now on the screen?
yeah, generalize the following transaction in the books.
Okay, now, right. Is it changing? One more transaction has come in?
Yes, sir.
Yes, sir.
Okay, right. So paid into bank is done. Bought goods from Mohan on credit for 20,000 rupees. So what's the entry? Mohan is a personal account. Mohan is an example for personal account. Goods is which account? We have only three
Real
options.
real account.
Real account.
Yeah.
So what's the entry? Real account says debit what comes in. What is coming in? So goods account debit. To credit the giver. Who is giving? Mohan is giving. So to Mohan account. But goods are there in several stages. Goods coming in, goods going out for the sales, goods again coming back from the customer for the sales return, goods going out from us to the vendor for the purchase return. So there are so many stages goods are coming in, going out. So to have a difference, to have a class, unique name for that, we go with purchase. If you write purchase account debit, it's a nominal account. If you write goods account debit, it is real account. Goods are real account, purchase is nominal account. Okay. So purchase account debit to Mohan account. This entry is, you can write either goods account debit to Mohan also correct. Purchase account debit to Mohan also correct. Okay. But if you write goods account debit to Mohan, when you are selling, you have to move that goods to another account. Then you have to cost of goods sold account. From goods to cost of goods sold. Okay. Then only we can know how much goods are left out unsold, how much goods are sold. Purchase means you have to take stock taking again. If you keep only in purchase account will show all the goods purchased. You should only take the stock at the time of closing of the year. Then you have to come out with the closing stock. Okay, but both are okay. But any one way they will follow in the practice. Next, purchased furniture for rupees 2,000. What's the entry? Furniture is a real account. So as per real account rule, you have to take the rule. Okay. Next, purchase furniture for rupees 2,000. What is another account affected? Cash. So entry is which one? Cash account debit to why cash account debit? Why furniture account? So sorry, furniture is real account. Okay. Real account rule says debit what comes in. So furniture is coming in. So furniture account debit to cash account. So many of you are not able to understand. Confusing. But how come furniture becomes? No, I'm not telling you furniture is going to become cash. I'm telling you furniture account debit to cash. You're asking why cash is credited. Why cash is credited? You are giving cash and you're taking furniture. It's a real account rule. Debit what comes in, credit what goes out. It's only one account. In this case, both aspects are coming under real account. Cash and furniture, both are real account. Apply real account rule. Debit what comes in, furniture coming in. So furniture account debit, credit what goes out, cash goes out. So credit cash. So furniture account debit to cash account. Being furniture purchased. Buying furniture, purchased furniture, computer. Same logic, only amount and the name of the item you are going to change. What's the entry? Computer account debit to cash account. Good. Next, paid postage. Still post office is there, no? Relevant only, yeah. Yes, what's the entry? Paid for postage. Postage is a nominal account. And another account is cash is a real account. So apply both the rule. Postage account debit to cash account. Being postage paid for rupees 60, 150. Sold goods for cash. Cash account debit to sales. Cash to sales. Sold goods on credit. Those who are already knowing, only from our class, if you know the entry, please tell. Yeah. Those who already know the entry, okay, let us, those people keep quiet. Yeah. Sir, only I'm learning the journal entry in our class. Last class was my first accounts class. This is the second accounts class. Yeah. Yes, madam. Because you know, I just want to understand. Yes, madam. Sold goods to Manish on credit. So Manish is an account, personal account. Goods sold. Sales is a nominal account. So entry is Manish to sales. Always sales is credit. Income. Sales is an income. Just now we seen that table, no? So income always credit balance. Expense always debit balance. Okay, so cash account debit, sorry, Manish account debit. Why are you debiting Manish account? Manish is the receiver. Debit the receiver as per personal account rule. Half. Another half comes from nominal account. Nominal account says credit all gain and income. Sales in income, I'm crediting it. So Manish account debit to sales account being goods sold to Manish on credit for rupees 10,000. Paid to Mohan 19,500 and discount received from us. Sorry, discount received from him or allowed by him is rupees 500. Who is this Manish? Do you remember? Sorry, Mohan. Who is this Mohan? Huh? That is story. Who is he? Who are you means what you say? I am Raj. He is a supplier. Basically, supplier, he became creditor. He supplied goods. We did not pay back any money to him, so he became a creditor. Now we are paying back to him. So what's the entry? Who is receiving? Mohan receiving. So Mohan account debit. How much is receiving? 19,500. Mohan account debit 19,500. To cash. How much? 500. But there is one more link to that. That is how much we have to pay to Mohan. Look at this. We bought from him for 20,000. But now we are paying him only 19,500 and telling him it's okay. Accept it. We don't give you another 500. He's also telling okay, no problem. He's allowing us a discount, a concession of 500 rupees. So what is a concession? No, concession is under what account? Gain. So it's a nominal account. So it's a credit, it's an income for us. So credit the income. Discount received account. There it is written allowed by him. But for us it is received. Discount received account credit. Okay. So the entry is Mohan account debit 20,000 to cash 19,500 to discount received account 500. Being Mohan account settled with a discount of 500 for the payment of 19,500. I repeat again. How much we are paying should be going for cash. How much we are settling, that should go to the person to whom we are settling. How much the difference between that two should come under discount. That's it. So entry is Mohan account debit 20,000 to 20,000. Though you are paying only 19,500, you are telling him close my account of 20,000. So Mohan account debit 20,000 to cash account 19,500. So there is a difference now, 500 rupees because of discount. So to discount received account 500 being Mohan account settled with a discount of 500. Next, 25th January, sold goods to Roy and Co. Sold goods to Roy and Co. Roy and company account debit to sales. Roy and company, it's a credit sales. Next, received check from Manish in full settlement of his debt, 9,750. Who is Manish? Manish is our customer and a debtor. Debtor is a person or an entity from which we have to collect money for the value supplied to them before or goods supplied to them before. Okay. Now, what's the entry? You are receiving a check. If you receive a check, what will happen? You will have to go and deposit that check in the bank. There are two types of treatment. In school, if you studied, your teacher might have told you, check received account debit to Manish account. I'll come to the discount little later. Check received account debit. They are treating check as a real account. You are receiving something, debit what comes in. Check is a real paper. Okay, they're treating like that. Check received account debit to Manish account. Then what they will do? After 2 days, 3 days, the bank boy, those days there was a posting called bank boy. That boy is always duty is to go to bank and do some activities of the bank office. Okay, he will go and deposit the bank check in the bank account of ours. That will take 1 or 2 days. Time they will take another entry. Bank account debit to check received account. This was practice. People were doing it. But those days, there's a difference in the time of collection and the deposit of the check. But nowadays, at par check, Delhi ICICI Bank check, if you give here also, collection is done immediately. Okay, computerized clearing system. Okay, so now what we can do, instead of writing like that, we can directly enter the bank account. Look at the entry. Check received account debit to Manish, bank to check received. Check received was in debit, check received is in credit. So debit, credit, cancel. Remaining you take it. The entry is bank account debit to Manish account. Okay. Okay. Forget about the first method. Just memorize the second one. That is, whenever you receive a check, debit the bank account. Assuming that immediately the check is deposited. So deposit it. Let him credit later, no problem. But our job is done. We deposited the bank check in the bank. I told them to credit. I requested them to credit. That's all. Okay. This problem will be there always. Today I'm depositing check. Tomorrow only it may be credited to my account. Even today, tomorrow only it may be credited. There's a difference between my cash book and the bank passbook. To do this, whether it is real reason or it is a fraud, we will prepare one statement called bank reconciliation statement. Okay, so we are not going to touch upon that, but just a side track, you just understand what it is. That's all. Come back to the mainstream, that is journal. So bank account debit to Manish account, but there is a discount. So bank account debit only 9,750. Discount allowed account 250. What is the total amount you have to receive from Manish? Yeah, Manish is here, see, 10,000. So bank account debit 9,750. Discount allowed account 250 to Manish account 10,000. Being Manish account settled for 10,000 by receiving 9,750. Okay. Today, after this entry, if you go and check the bank passbook of your own with the bank, this 9,750 will not be there as an entry. They will take 1 day or at least some hours to credit it. So that time there will be a difference that you keep in mind. Okay. Paid for electricity charges 100. Next transaction 31st January, and also paid rent by check 2,000. What's the entry? Both are nominal account expenses. So we can debit both. Electricity charge account debit 100 to cash account 100. Okay. Then rent account debit 2,000 to bank account 2,000. If you pay through check, to bank. If you pay by cash, to cash. That's it. Okay. Whenever you receive money, cash account debit. Whenever you receive check, bank account debit. Just opposite for payment. Any doubt up to now? Yeah, because two transactions, no. Otherwise, if you want to make one transaction, sir, electricity charge account debit 100, rent account debit 2,000, to cash 100, to bank 2,000. That does not make any, yeah, two entries only. When the debit or credit is common, there are two debits commonly in two transactions that can be combined. That is called compound entry. One debit, more than one credits, or one credit, more than one debits. That's called compound entries. Okay, if you have two debits and two different credits, there is no meaning of combining the two. Okay. Any doubt up to now? Yeah, that time it can be a compound entry, not total single entry. That's a different meaning. Compound entry, only one entry. Okay, one debit, one credit is there means we call it a simple entry, simple, ordinary, simple. Okay, single entry is having different meaning in accounting. Okay, so Both paid by cash. Electricity charge account debit 100, rent account debit 2000, to cash 2100. Over. Any other doubt? Those are online. Anybody? Okay, you tell me some transaction we can try for generalizing that. Instead of me telling you the transaction, somebody feeling sleepy. I can feel that. Before I feel sleepy, I should ask you. Yes, Emma. Salary? Salary paid 10,000. Okay. What's the entry? Salary to cash or salary to bank. That's fine. Simple. Anything else? Those are online. Can you hear me? Those are online. Are you there? Anybody?
Yes, sir.
Yeah,
Yes, sir.
yeah. Yes. Any doubt? Any? I'm just requesting you or telling you to do some kind of hypothetical transaction. You tell us. We'll try to find out how to generalize it. Okay. Salary paid. Then that much only.
Purchase car from loan.
Purchased. Yes, sir. Car for
Purchase
loan.
car for loan.
Okay. So what's the entry? Purchased car for loan. There's nothing called loan. He's telling colloquially it's on credit. We call it as credit. Colloquially, loan. Okay. I have got car on loan, car loan, home loan. We are telling, but it is credit. Yeah. So what's the entry? Loan account debit. You confused him. He was so far okay, but now car loan. It's not just now I'm telling. Why I'm telling that loan is insignificant there. That's why I'm giving an explanation. Home loan, car loan, we can say, but here it is only on. It's called credit. Loan is a colloquial term. In accounting, loan means getting something cash. That time only we'll call it as loan. I have taken a loan from HDFC Bank, 20 lakhs. That time you have to call it as a loan. Credit means you are buying something without paying money. That we cannot just call it as loan. That's just credit. Okay, what's the entry? Car account debit, there's no doubt, undoubtedly one is clear. Car is a real account. Real account rule says that debit what comes in, car has come in, debit it. Car account debit, then to
Bank.
cash. You are a good buyer, man. You are buying car on credit basis and you are telling I have paid money. You are declaring that I paid money. How can you do that? They won't accept. Bank account, where the bank comes from? Where are you buying the car? You are buying the car from the ICICI Bank? They will do sell, they'd sell everything. That's okay. But are you buying there? If you're buying there, yes, you are right. Bank account, ICICI Bank account, credit. But where you bought the car? Sir, gentlemen, where you bought the car?
Normal bank.
In the? You also bought the car in the bank? Okay, possibility is car loan. He is telling in the showroom, the distributor place, he might have approached the bank. The showroom itself is arranging for that. Okay. Or the car vendor is also giving the car on credit basis. So if it is from the car vendor, the vendor account should be credited. Bajaj, something, whatever the name of the company, you have to credit. Okay. Otherwise, from the bank from which you got the finance, that need to be credited. That's it. Okay. You are saying something? Returned. Why are you returning? You just sold it. Yeah. Like? Now, what is your question? From A, B. You bought goods from Mr. A by paying rupees 10,000. Okay. To B. That's it. What is the difficulty in this? Madam will tell the answer. Yes, madam. There are two transactions. Okay, that and all, let it go in mind. Come out with the answer. Yeah. Yes. Goods purchase account debit to cash. Why? He paid the money now. So 2 cash. Then to B, you sold it. Did you receive money? No, that's not later. Profit is later. How do you say that it's a profit? You bought it for 10,000, sold it for 20,000. Is there any profit? You are saying that 10,000 is there, but it is not necessarily. Yeah, madam, understood the accounting. He bought it for 10,000, sold it for 20,000, but his salesman commission per month salary is 15,000. He sold only that product that month. So what is it, profit or loss? You are changing your answer completely. Plus 15, plus 10 to minus 5 are going. There's a 15,000 rupees difference. So we don't worry about profit or loss now. And again, the job of accountant is not to worry about profit or loss. The accountant job is to find out the profit or loss correctly. That's it. Okay. So the entry 2 is very simple transaction. You think it's complex, but it's very simple. Okay, you are buying from somebody, you are selling to somebody, buying separate entry, selling separate entry. Okay, your doubt is what you do with the 10,000. The profit of 10,000. Apparently speaking, profit is there 10,000. What to do? That will automatically get recorded in the books of account. Final stage when you prepare the profit and loss account, from sales we minus all the expenditure. This 10,000 will come and sit there after minusing all the overheads. That you don't worry. Okay. Profit is there, loss is there also. Accountant does not know about it. You are selling it. That's all. Invoice is raised. For the invoice, 20,000 invoice raised. For the 20,000, I'm writing entry. That's it. B account debit to sales. Otherwise, cash account debit to sales. Bank account debit to sales. Any one of these three, based on the way in which it is sold. Yes, sir. Anybody? Yes, sir. You want to say something? Yeah. We're interested in listening. Good. Anybody? Any transaction? Oh, in the morning, that other class, they told me so many hypothetical transactions. I was not able to get it. Yeah. Anybody like that?
Sir, I have one. So books sold to publisher.
Book sold to publisher.
Yeah.
Normally, publisher will sell the book.
Yeah. I mean,
My
like,
understanding is, yeah.
So if an author is selling, suppose,
Okay, author is giving the right to the publisher.
Yes. Yeah.
To make the book, to print the book. Yes. Correct. Yeah. Then.
So if the statement is books sold to publisher, should we just add then the author sold book to publisher
No.
create the account?
See, gentlemen, please understand. Author is giving the right of printing some material to the publisher. Suppose, take an example. You are writing something. You are authoring something. You are having a manuscript with you. You are taking that and going to the Kalyani publisher and telling them, "Sir, I'm giving this to you. You print and sell it." This is an agreement.
Okay.
Yeah. In this, what is your question?
So then publisher account will be debited.
No, in this, no transaction at all there, first of all.
Okay.
It's not a transaction at all. There's an agreement between author A and publisher Kalyani.
Okay.
Agreement. What is agreement? I am authoring a book. I give the right to you to publish it. That's all. There is no transaction happening here.
Okay. Got it. Thank you, sir.
Yes, sir. Who? Okay, the B is not car, it's goods actually. It can be any water bottle, car, whatever it may be. Okay, sales return. Good. We have not discussed so far. Good. The B returning, the customer B returning the goods to company, this company. What is the entry in this company's book? Yeah, anybody? Yeah, exactly. So sales return account always to be debited. Sales is credit, no. Opposite is sales return. There is a customer buying goods from you. After seeing that, he is finding that there is some defectiveness in the goods. The customer who bought goods on credit only will be eligible for this transaction. If I bought something on cash by paying cash, if I return it, also no use, because already money is there with them. They may not be returning it back, the money. I have to buy another goods. Exchange only possible. Okay, that time it's different altogether. But now it is goods returned. So goods returned means sales return account debited to the customer account who is returning that goods. Similarly, opposite, the vendor I am sending back. I have collected from 4 customers. I am sending to 1 vendor. So the entry is vendor account debit to purchase return account. Purchase return account can be otherwise called as return outwards account. Sales return account can be otherwise called as return inward account. Okay. Fine, good. Anything else? Any other transaction? Yeah. Cash withdrawn from bank. What's the entry? When depositing into bank? You are withdrawing amount and he is telling my account balance should increase. Bank account debit means what? My account balance is? You remember check is deposited into bank. What entry we made? Bank account debit. Whenever bank balance increases, we have to debit the bank. You will get a message. Your account credited. That is for their point of view. Your name in their book, your name is credited. Rajesh account is credited in their book. That they are telling to you. According to you, their name in your book should be debited for deposit. Suppose your friend is depositing in your bank account directly. You will get a SMS. Your name, your account number has been credited with so much of amount. Meaning your ledger account in their book got credited. Entry what they will make? X account credit. Cash account debit. They are receiving cash. For them, it's cash received. In their books, cash account debit to X account. That X is you. To you, they will send a message immediately, automatic message. Your account got credited. In your book, bank account debit to your friend account, because your friend only gives money on behalf of you. Your friend has to give money to you. Instead of giving to you, they are giving in your bank account. So bank account debit to your friend account name in your journal entry, in your book. Okay, but just opposite is there for withdraw. What's the entry? Cash comes in. So cash account debit to bank account is the entry for amount withdrawal. Any other entry? Morning in that class, somebody told, sir, I sold goods to Mr. X. This X is very poor fellow. We'll always take X only. Okay, we sold goods to Mr. X on credit. What's the entry? Sales. X to sales. Clear. After some time, X absconded. One boy told in the class. X got absconded. Meaning? Not traceable. Okay, bankrupt. Okay. What's the entry? Bad debts account debit to X account. Why? The amount recoverable from X is not recoverable. To be recovered is not able to be recovered. So it's a loss. Permanently it cannot be recovered. He told, if you come this side, I'll just bring some gundas and beat you. Otherwise, I'll write a suicide note and commit suicide. Or he is really insolvent, bankrupt. Possibilities are there. Somebody will have money, they won't give. Somebody really don't have, they cannot give. Okay, in that case, it's a loss for us. In both cases, loss for us. So loss need to be debited according to which rule? Nominal account rule. Debit all expense and losses. So bad debt is a loss. What is a bad debt? A debt becomes very bad. What do you mean very bad? Irrecoverable. When X is still there and is replying to your mail, attending your call, up to that time it is good debt. When he's attending 1 out of your 10 calls, it becomes doubtful debts. His phone is switched off means that becomes bad debts. So this case absconded means bad debt. So bad debt account debit to that customer account, customer name. That's it. Okay. After some years, one fine morning is coming to your business organization. Sir, do you remember me? Yes, I have seen you somewhere. No, sir, I was your customer. I only bought some goods from you for 10,000 rupees, but I did not pay you any money. I was absconding some time due to some situation. Now I have some money. I have a lot of money. I want to settle your loan, settle your amount. He's giving you 10,000 rupees. Receiving 10,000 rupees from the customer whose name was already written off. What's the entry? Analyze the transaction. Analyze the one is very clear. What is that? Cash debit is clear. What to be credited is answered now. What is this? You have taken some money from somebody. Unknown person is now. There is no relationship between you and him in the books, except you remember him, that's all. So it's a gain for you. It's a gain. So gain need to be credited. So what gain it is? Bad debts recovered account. So cash account debit to bad debts recovered account. Clear? Okay, like this, any other thing? Any other example? We have another question also here. There are so many transactions here, but yeah, look at this. Gopinath commenced business with cash. Typical repetition. Only Sumit is replaced by Gopinath. So what's the entry? Paid into bank. Bank to cash. Bought goods for cash. Purchase to cash. Office furniture account debit to cash. Sold goods for cash. Cash to sales. Sold goods to Manoj on credit for rupees 24,000. Manoj account debit to sales account 24,000. Bought goods from Narayan on credit. Purchase to Narayan. Paid rent to landlord. Landlord account debit to cash. Why? Are you giving any loan to landlord? If you give a loan to landlord, you are right. You are enjoying his building and you are telling him, tomorrow you have to pay me 3,000 rupees. How it is possible? Not possible. So landlord is material only when if you give any benefit to him without any compensation, without any consideration. But you are giving some benefit to him for the exchange of the benefit what you enjoyed. So landlord is immaterial here. There is no personal account involved in this. Nominal account is involved, that is rent. Okay, rent account debit to cash. Good. Paid salary to manager. Don't tell manager to salary or manager to cash. Okay, salary to cash. Received commission from Suresh. Commission received account debit. Why? Commission received is income or expenditure? Then income is to be credited or debited? Then why are you debiting? Yeah, you are always confusing with the names. Suresh is immaterial, man. Suresh is immaterial here. Purposefully that word is given there to confuse you. Why? Suresh is not significant there. What is significance? Why you are giving to Suresh? Sir, why you are receiving from Suresh? You have rendered some service to him. For appreciation of your service, he is giving you 2,000 rupees in the name of commission. So what's the entry? Cash account debit 2,000. There is no doubt on that. 2, commission received account 2,000. Suresh is not at all matter here. Okay. Suppose received 2,000 rupees from Suresh. What's the entry? Received rupees 2,000 from Suresh. Received 2,000 cash to Suresh. Cash that time Suresh is matter. Okay. Sold goods to Shreya rupees 3,000. Okay. Okay. Shreya to sales. Now you got the point. Shreya comes, you got the point. Bought goods from Ramesh. Purchase to Ramesh. Okay, now this question is only from online people answering. Yeah. Bought goods from Kamal for cash. Anybody from online? Purchased goods from Kamal for cash rupees 5,000.
Purchase account debit to cash account credit.
Purchase account debit 5,000 to cash account credit 5,000. Very good. Very good. Kamal is not matter here. Next, sold goods to Rajesh for cash rupees 6,000.
Sold.
Cash to sales.
Cash to sales. Very good. Paid postage 300.
Postage debit to cash credit.
Postage account debited to cash account 300. Withdrew cash from office for personal use. Once again, wait, don't tell the answer. This is only possible in sole proprietorship organization and partnership organization. In company form of organization, owners are not even allowed inside the company. Please understand. Except during the meetings, on invitation, you are asked to come in the company. Otherwise, management is separated from ownership. Ownership and management are divorced from each other in company form of organization. So you are not allowed to withdraw anything from the company. Only this is available, possible only in the case of sole proprietorship, where owner and the management are one and the same. Or most of the time, same person will be there. He is a owner, he himself is a manager. Okay. Anyhow, what is the entry for this? What is the,
Personal use
Yeah.
debit to cash credit.
which matter? Which account debit?
Cash.
No, which account debit?
Personal use.
Personal
Or you can
use.
tell administration use.
What is administrative use, personal use, and what is the meaning of this transaction? First of all, Sumit, our owner, who has contributed 1 lakh rupees in the beginning to start the business, somehow is in emergency need. He is taking rupees 2,000 from the off business. He is going to the accountant, give me 2,000. He is taken. Now accountant has to record that. Otherwise, the closing balance of cash will be short by 2,000. He may say, it's my business, give me. Yes, we are giving. It's your money, take everything. I have no problem. But only thing is, tell me, sir, what for it is. It's my personal purpose. Okay, take it and go. Sign. Sign in a document, take and go. So that money is called opposite of capital. When he is bringing money into the company, we have called that as capital. Now it is reverse of capital. We have to name something for that. It's also personal account. Money taken from business by the owner. To whom the money is going? Owner. What is going? Money is going. So cash account is affected. That is real account. The Sumit account is affected. That is personal account. But when Sumit gives money, we call that as capital. When he is taking back, we call it as drawings. We call it as drawings. Don't confuse the word money drawn from bank. That is different from money drawn for personal use. It can be taken from the cash box of the business, or it can be taken from the bank also. Both are called as drawings. So drawings account, debit. When it was introduced, we have given him credit. You remember cash account debit to Sumit's capital account 1 lakh. Now it's opposite. Sumit's drawings account debit to cash 2,000. If there are 2 or more owners. So only one owner is there. Simple drawings account debit to cash. Drawing is an asset to the business. Capital is a liability to the business. We simply call it as equity and liability. Equity is nothing but internal liability. Okay, fine. Let him use for any purpose. That is why for his personal use, he is using. For that, I have written drawings. What is going out of us? As means what? Business. What is going out of the business? Cash. That is why. He is going to do some horse riding or something, whatever it is, or cards. Let him do whatever he wants. That is his. He may have some personal accountant. That is the worry of that personal accountant. We are accountant of the business. There he will write how that 2,000 was spent. Gowda commenced business with cash. Again, I think it's repetition. We have to stop here. Any other transaction which comes which you are coming across in your mind? Sir, this is different. I want to ask. Anything is like that? Yeah. Because otherwise it's again same. See?
Advance paid.
Yeah, good. Advance. Advance paid to whom?
Employees.
Yes, madam?
To employees.
To employees. Good. So advance paid to employees. What's the entry? One thing is for sure. What is your? How are you paying, madam?
By cash.
So one thing is for sure. Credit is cash. Cash goes out.
So debit to
Are you giving a
employee.
loan or advance?
Advance.
Then why are you debiting the employee? One of your friends in the class is telling, can we debit employee account? If you debit employee account, it becomes purely a loan. Salary account debit to cash account. So what is the entry for payment of salary? Okay.
Bank to bank to
Salary to bank
salary to bank.
or salary to cash.
Yeah.
Sir is recommending or thinking, why don't we pass the same entry and every month we can reduce from the salary? Your thinking is right, but execution of a transaction is, entry is little difficult. Salary to cash. If you pass the same entry for advance given, then there is no difference between advance given or salary given. You are telling both same entry. But your thinking
Yeah.
is right. Your thinking is right. How do you bring that into records? Salary paid in advance is asset or liability for the business? Asset, no. For the business. Asset, no.
Yes, sir. Employee.
Yes, paid in advance. Asset, no. Why do you confuse? Simple. I have 5,000 rupees in my pocket. Instead of keeping in my pocket, I'm giving to you. Okay, keep it as an advance. Work for next 5 months. I'll reduce 1,000 rupees each in the next 5 months of your salary. Now this 5,000 is my money. It is with, instead of in my cash box, it is there in the bank account of or in the hands of the employees. That's all. So it's my money. It is with them. It's my asset. It's my asset. Advance received from the customer is liability. Their money I have taken in advance before I provide some service or before I provide some material. We come back to this advance paid to employees. So it's an asset. So advance to employees account debit to cash. That's all. Now, whenever salary is paid, if you agreed to reduce the amount, what you have to do? Next month salary paid. Salary account debit to cash is there? No. Instead of that, suppose his salary is 10,000. He taken advance of 5,000. Taking advance entry is advance salary account debit 5,000 to cash 5,000 over. Next month, when he is going to receive salary, normally what you do? Salary account debit 10,000 to cash account 10,000. But this month, because he already taken 5,000, agreement is every month 1,000 to be reduced. So entry is salary account debit 10,000, advance salary account 1,000 to cash account 9,000. Now advance salary has reduced by, already there was 5,000 debit. Now there is 1,000 credit. The net effect is 4,000. That is an asset for us. Again, if you prepare that time the asset liability statement, that is balance sheet, we will show it in the asset side. Only 4,000. Are you getting it, madam? Advance payment of salary.
Yes, sir.
Yeah. Any other thing? Okay. How much you collected from him? Okay. How much you collected from him? 9,000. Okay. How much you made an invoice? You know invoice, right? Bill, yeah. How much you made invoice? Final amount 9,000. So entry is same. You know the entry. What's the entry? Customer account debit to sales. Customer account debit to sales 9,000. That's all. If the invoice is about 9,000, it's 9,000 only. How much you are claiming from him? You might have sold so much of worth of goods, but finally, how much is the bill? Bill says that 9,000. Pay 9,000. 20,000 goods discount. Okay, for 9,000 I'm giving you. The entries would be only for 9,000. That's all. You are not giving anything. My contractual relationship between you and me is how much? For how much? Rest is your internal purpose. That automatically get adjusted in your margin. In margin, sales is captured by how much? 9,000. Already your cost has been captured in some of the relevant cost aspect. Finally, you are going to compare this cost and the sales. The net effect will be profit. There you get adjusted all these. Sir, I bought it for 20,000, but I sold only for 9,000. Equity will reduce. Your loss will be recorded there in the P&L account. Not now. Each and every transaction will not be recording your loss or profit explicitly. It will record as a incidental one. You are writing it, that's all. Later on, the effect is captured. Okay. Suppose you sold it for 9,000, entry is done. Customer account debit to sales account 9,000 done. After 1 month is coming, sir, you given me the time of 3 months time to settle the 9,000 rupees. But I have some money, please take it. I don't want your 3 months credit period. Within 1 month, I'm giving you. That time he is giving, sir, take only 8,500. 500 I won't give. He's going. You are also accepting it. That time, discount arising into picture. Contract is for 9,000, but you are settling, you are settled for, we already discussed that. Okay, Manish account, Mohan account, we discussed now. In this case, cash account debit 8,500, discount allowed account 500 to customer account 9,000. Yes. Can we move on to the next area? That is ledger. What's the time? It's time for break or we have some more time? Okay, still something will take up to 3 o'clock. Okay. Any other doubt in the journal? Okay. You practice. You may have some doubt, means you can ask me later. Anything new into this? Nothing new. Paid rent, Suresh returned goods, paid salary, returned goods, Rajkumar. Yeah. Oh, look at this. Business started with the following assets and liabilities. What do now? So far, we started a business with cash, but in this case, look at this. Madhu was carrying on business as a wholesale merchant. He had the following assets and liabilities on 1st January 2017. How do you record this? Cash, furniture, amount due from Bashir, amount from Paul. This is called opening entries. Not a new business started. Madhu was doing a business. 2017, his book shows like this. How do you record this in the journal? Furniture account debit 2,000, cash account debit 4,000, Bashir account debit 2,000, Paul account debit 1,500 to capital account. All the total. Okay. Purchased goods from Paul, sold goods to Bashir. Okay, this is all okay. Withdraw, bought. Okay, brought additional capital. Same entry. Cash to capital. Okay. This we discussed or not? Capital and revenue expenditure. Huh? We discussed.
Oh.
Capital expenditure, revenue expenditure. Okay. If it is not, I'll tell you in 2 sentences. If you buy raw material, if you pay electricity bill, if you pay rent, all those expenditures are called as revenue expenditure. If you buy a motorcycle, motor car, building, all these things are called plant, machinery, all these things are called as capital expenditure. Difference between capital and revenue. Capital expenditure will result in creation of assets. Revenue expenditure will help the fixed asset to generate income. Machine, I bought it without electricity. If I keep the machine, it won't produce anything. So payment of electricity is revenue expenditure because it is giving the option to the machine to generate income. Okay. Machine is the capital expenditure. Buying of machine is a capital expenditure. Okay, that is being explained here. Look at this. Capital expenditure is resulting in fixed asset. Revenue expenditure is just captured as just cost expenditure. Example for revenue expenditure is buying of raw material, buying of stationaries, payment of salary, rent, etc. Yeah, there is one thing called deferred revenue expenditure. A, B, in between, there is some expenditure. That is deferred revenue expenditure. What is it? It won't be revenue immediately. It gives the benefit for few years. Not as long as fixed asset, just few more years. Advertisement, if you're keeping a board in railway station or in the airport or bus stand or something like that, Okay, that will be there for some 10 years or 5 years. The expenditure what you're making, you cannot just minus from your sales to find out the profit of that year. You have to minus the expenditure gradually from the revenue of several years. Portion of the, just like a capital expenditure. Okay, best example is advertisement, heavy research and development and advertisement expenditure. Okay. Okay, freight paid on purchase of machinery is an example for revenue or capital or deferred revenue. Why?
Deferred revenue.
Why?
Because the machinery will run for at least 5 years. So one time I am paying this one, but I will deduct it for 5 years.
Machine is only for 5 years. It can't it be more than 5 years? Is there any time
Yes,
limit
sir.
for deferred revenue expenditure? It's not time limit. It's about the nature of that expenditure. Just now we discussed machine is a capital expenditure. Incidental charges to buying of machine is also capital expenditure. Okay. So this is capital expenditure. Suppose freight paid on purchase of raw material, revenue expenditure. Revenue expenditure. Installation and commissioning of machine, erection of machine, expenses paid on erection of machine. Why? Capital expenditure. It's a capital expenditure. Any expenditure incidental to the fixed asset is capital expenditure. Commission paid on purchase of machine, capital expenditure. Okay. Built an extension to the factory building, capital expenditure. Rebuilt a wall destroyed by storm. Okay. Heavy marketing expenditure incurred on launching a new product. Deferred revenue expenditure. Very good. Okay, like this, we have capital receipt and capital payment. Sorry, capital payment. I'm sorry, capital receipt and revenue receipt. Just like payment we discussed. Payment means expenditure. Now receipt. 2. Issue of shares. Now LIC is going to issue shares. Okay. The government is going to get the money. LIC is not going to get the money. You don't know that now. New company issue share, company will get the money. Now the owner of LIC is going to sell their shares. That's it. Simple logic. Okay. Now the money received by LIC, suppose if they are additionally issuing some shares, that receipt is capital receipt. Okay, that is not revenue for them. That is not sales. They can minus any expenditure from there and they can show the profit. Issue of share capital, issue of debenture, borrowing of loan, all these things are called as capital receipt. Okay, then what is revenue receipt? Amount received from customer. That's revenue receipt. Okay. So that is explained here. Okay, let us come to this very, very important ledger. The next stage of accounting cycle is ledger. This is the format of ledger. After you prepare journal, we have to prepare ledger. How many accounts are there in journal? That many accounts we have to prepare in the ledger. What do I mean by how many accounts are there in journal? Journal we are writing one by one, date wise. Suppose 30 dates you recorded the journal, 30 dates. 1, 2, 3, so goods sold, purchased, commission paid, rent paid, all those things. Now we have to check for one account, cash account, write it separately. So after that, there is one purchase account, write it separately. Again, cash comes, no need of counting. How many accounts individually coming in journal? That many ledger I have to prepare. Why do I prepare ledger? Just now look at this. What is ledger? Ledger means a register which is having a number of pages, consecutive number to maintain the accounts of each and every heading. Ledger accounts. How to maintain? Ledger account can be a summary statement of a particular account. In journal, if you go and check, sir, how much I paid rent. Today, how much you paid rent can be referred in journal. How much I have so far paid rent in this particular year, that cannot be given by journal at a sight, at a glance. It won't give. You have to refer the page and you have to count wherever rent is there. But here, collect all the transaction relevant to rent, we'll group it in one place. That's called ledger. Okay. So summary of a particular account is called summary of the transaction of one account, either a person or an asset or expense or income, that can be called as ledger. The format of ledger is this. Both sides, two sides are there. One is debit side, date, particulars, journal folio number, amount. Date, particulars, journal folio number and amount. Okay, this is the ledger. How to prepare it? How to prepare it? From the journal, we have to prepare ledger. How to prepare? Suppose first example, cash account debit to Smith's capital account. We have to prepare two ledger account. One is cash, another one is Smith's capital. In cash account, if it is cash account, go to debit side. Why do go to debit side? In the journals, cash account is in debit side. So I have to go to the debit side of the cash account. I have to write it here the date and I have to write the to Smith's capital. Simple logic. Cash account means debit side and all you will write only receipt. Credit side you will write only payment. That's simple logic. But from journal you can write it based on the logic also. Cash account was the cash account is there in the journal debit side. That should be written in debit side of the ledger. If cash account is there in the credit side of journal, then you write in the credit side of the ledger. Okay, we'll prepare one ledger, we can understand. Next one is trial balance. What is a trial balance? Trial balance is a statement which contains the balances of ledger accounts. What is balance? Just now I told you in the ledger, we have two sides. Look at this, we have two sides. Suppose to my right, debit side is there. Okay, if you total all the amount in the debit side, one amount you'll get it. Similarly, credit side, you total all the amount. The difference between the total of debit side and credit side will be called as balance. Will be called as balance. Suppose debit side of the ledger account is 1 lakh. The total of the debit side of the ledger account is 1 lakh. Similarly, the total of the credit side of the same ledger is 60,000. So what's the difference? 40,000 difference. Which side is the less amount? Credit side. We will write that and close it. When it comes to trial balance, we have to write it in debit side because debit side is more. Which side is more? That side you write it in trial balance. Okay. So all the balances of all the ledger accounts should be written in trial balance. The format of trial balance is this. Why do we prepare trial balance? To check the arithmetical accuracy of the books of accounts. Arithmetical accuracy. What do you mean arithmetical accuracy? Plus minus. Okay. I have written 10 items. Those days only manual calculation. No. Today, if I ask somebody to calculate 2 plus 2, immediately he's taking, sir, 1 minute, sir. Calculator is he's exactly telling 4. Yes, a 4. Calculator. But those days, 1974 plus 3498 should be added only manually. Okay. So before going to the next stage of calculating the profit and loss and balance sheet, they want to check it, whether it is correctly done arithmetically or not. That checkpoint is trial balance. If this total of trial balance, debit side and credit side are matching with each other, then we can say there is no arithmetic mistake. There may be some error. Suppose one voucher you missed it. Trial balance will tally or not? One voucher you missed it. It will tally. Who told it won't tally? It will tally. You did not write anything about the voucher. It will definitely tally because how does trial balance know that you done some transaction and you omitted it? There is debit also ignored. Ignored. But cash account, if you paid and not recorded, that day itself cash account might have shown you. That day itself. Opening balance 10,000 was there. Closing balance is 1,000 only, 9,000 spent. Spending account, you are having 1 by 1. That is not tallying to 9,000. Then that day only you'll find it out. That is possible. But after doing everything, one voucher itself you missed. Suppose that is a credit voucher. You did not pay anything. Credit bill. It won't tally. I mean, it won't get affected here. It will not be disclosing it. So there are some items, some errors which cannot be disclosed by trial balance. One place you have given 100 rupees credit, extra credit. Another place you have given 100 rupees extra debit, automatically tallying. This is not a problem of arithmetic error. This is a manual error. You've done double, one place double credit, another place double debit. So we are not going to check more of trial balance, but understand as a executive, just what is trial balance and why it is prepared, the logic. But simple point is, if trial balance is tallying each other, agreement of trial balance of debit and credit is there, that does not convey that everything is correct. Even though it is agreeing debit and credit, there may be a chance of error of principle. We call it error of principle. Buying a machine, what's the entry? Suppose you write purchase account debit to cash, your trial balance will tally. This is called error of principle. What you have done? You treated a capital expenditure as revenue expenditure. Machinery should be debited because you bought the machine, it's an asset. But instead of that, you written purchase account. Capital expenditure, capex has been treated as revenue expenditure. Trial balance will tally. Okay, just an idea. That's all. So after this, we are going to prepare ledger account and trial balance after the break. I think now it's 3 o'clock. Yeah, we can take a break. After coming, we'll do ledger and trial balance. Okay. Thank you. See you again. Those who are online, 10 minutes break. Come again after 10 minutes. Thank you.
Okay, sir.
Okay,
Thank
sir.
you, sir.
Thank you, sir.
Okay, those who are online, can you hear me?
Yes, sir.
Yes,
Yeah,
sir. you can.
yeah, we are
Yes,
starting
sir.
now again. Fine. Okay, let us prepare the ledger and trial balance now. Okay, let us do it in the same thing. Is Excel sheet visible to you? Those who are online?
No, sir. Is it okay now? Is it visible?
Yes, now we
Yes,
can
sir.
see.
Okay, let us try to understand how to prepare this ledger and trial balance. Okay. For that, we need to have some journal entry. Okay, first we will have some transactions, or we can take from the previous one, starting business, opening a bank account, purchasing for cash. Okay, these three we can take it. Okay. Suppose starting a business, what is the entry? Cash account debit to capital account, right? Cash account debit to capital account. And then opening a bank account debit to cash account. Suppose you're buying something for cash, purchase account debit. Purchase account debit to cash. Okay, in this, how many ledger accounts? 3. One is cash, capital, bank, and purchase. To make little more clear, I just assume some more transactions. Okay. After 1 month, he is introducing further capital. Further capital. So cash account debit, or he is giving capital through check. Bank account debit to capital. The owner has introduced further capital through check. So further the entry is bank account debit to capital account. Okay. And there is a transaction called purchase goods from X Limited. Okay. So entry is purchase account debit to X Limited. Let us fill the amount also. Cash. He was starting a business with rupees 1 lakh. Bank account was opened by depositing 10,000 rupees. Purchase was done for 80,000 rupees for cash. Okay, then again he was introducing a capital of 50,000 rupees. Purchases were done from X Limited for rupees 1 lakh. Cash paid to X Limited. Entry. Cash paid to X Limited entry is, yeah, X account debit to cash. Do you have cash or not? Check the balance cash account. I'll just take it little less amount. 10,000 is there in the company or not? Check it. Nobody tells anything. Cash was 1 lakh, 10 gone. So remaining is 90, 80 gone, remaining is 10. Yeah, 10,000 is there. Now in the business, there is no cash. Cash is withdrawn from bank. What's the entry? Cash withdrawn from bank. What's the entry? Cash account debit to bank account. How much we have in bank? How much we have in the bank? We'll take 20,000 rupees. If you draw more, bank will not give you money. Okay. With this, we try to understand how do we post this into ledger. Okay. Right. How many accounts are there now? Look at this. Cash, capital, bank, purchase, X. 5 accounts are there. You have to prepare 5 ledger accounts. 5 ledger accounts. What are they? Cash, capital, bank, purchase, and then X Limited. Okay. So look at this. I'm going to prepare this first cash account. You have seen the format of ledger, right? Date, particulars, journal folio number, amount, rupees. Okay. Same thing is in the credit side also. Okay. So I have how many accounts? 5 accounts I have. I'm going to prepare the first account. That is cash account. Now look at the journal. Cash account debit. It is in debit side. Okay. So I'm going to debit side of the cash ledger. I am writing to capital. Go to the debit side of the cash account. I'm writing to capital. The date you have to write it. Whatever the date is there in the journal, same date you have to write it. What is the amount? 1 lakh. Okay. Similarly, come to the next journal entry. In the next journal entry, we have cash. Cash is in which side? Credit side. So I'm going to write it in the credit side of the cash account. Credit side of the cash account. By bank account. Cash account was credited by bank account. Okay. How much it is? 10,000. Okay. Next, third entry also cash is there. Look at this. Cash account is there in the which side? Which side? Credit side. So I have to go to the credit side of the cash ledger and I have to write by purchase. What is the meaning? Because of purchase, my money has come down. Come down by how much? 80,000. That I'm writing it here. Okay. Look at this third and fourth entry. Is there any cash in this? No cash. So I will not consider this right now. Next, no cash. Here there is a cash. It is in credit side. By X account. How much? It was 10,000 rupees. Look at this, 10,000 rupees. Next, last entry, cash account debit to bank. Cash account is in debit side. So I would write it in the debit side of the cash. Debit side of the cash ledger. This is a cash ledger. Okay, debit side I'm going and I'm writing it here. To capital. Sorry, to bank. How much it was?
20,000.
Huh? Okay, 20,000 withdrawal. Okay. Then the additional capital introduced, where it is? Where it is? The next one. Okay, that's a bank. That's why it's not coming. Okay, I thought it is cash. So now all the entries are done for cash. Okay. After seeing all the journal entries which are affecting that particular ledger account, you have to balance the ledger. We have made sure that all the entries are posted in the ledger regarding that particular account called cash. Now balancing. Look at this. There are debit side 2 entries, credit side 3 entries. I'm taking the total of this. Total. Okay. Total. Total of this, how much? 1 lakh. Okay. What is the total of this? 1,20,000. Okay. Now the difference between these two, how much? 20. Okay, this difference between these two is 20. This 20 is called as balance. If you go to the accountant now, he should be having cash in hand. How much? 20,000 rupees. Okay. This is called balance brought down for the next month. To balance next month, February. Balance brought down. Opening balance of next month is this amount, 20,000. Okay. Next month again they will start doing this ledger. Okay. So this is what we call it as preparation of ledger and balancing of ledger, totaling of both sides finding out the difference between both sides and recording that difference in the shortage side is called balancing of ledger. Okay, so ledger account will tell you the detail about that particular account over a period of time, and also it tells about the closing balance of that account.
So what is this B/D?
Yeah, brought down.
Okay, brought
Brought
down.
down or carried down. C bar T means
Okay.
carried down. It is just carried down from the balance differences, and it is again brought down to the next month or next date. Ledger can be balanced at any given point in time. Normally, weekly. Cash ledger may be balanced daily basis. Okay. Of course, today it's in ERP. You can balance. You can prepare even balance sheet at every second. Only one click, we can get it. Everything is automatically recorded. Those days only we have to prepare manually. See, after my 12th standard, I was trying to go for auditing CA course. Then in my village, in my town, there was one auditor. I went there and I was asking for apprentice. That time apprenticeship was there. First you have to go for apprenticeship, then only you have to write exam. I approached him. Okay, he told, okay, I will take you. Okay, I was a gold medalist in my 12th standard. Okay, that is not a matter here. The next one I'm trying to tell that is matter. I went there. He was giving me one booklet, voluminous booklet, looking like a Constitution of India. That much voluminous book. Computer printout. Those days also computer we had. Excel they will maintain the accounts. Not this much of ERPs were famous. He has given. This is a trial balance. There's a difference between the debit side and credit side. Please look into this and try to identify the mistake. Trial balance itself is a voluminous book. So why I'm telling this, I was not a full day. I was spending the time only totaling only, nothing more than that. Totaling. That you know, printer will be a dot matrix printer. For one copy, if you want to take print, it will read from here to there like that. One now also somebody may use it. Okay, that the voluminous book. Why I'm telling is this kind of ledger, the balancing is easy today. Everything is in ERP. Okay, even Excel, small companies, even Excel itself, we can do it. Okay, we can make some macros and we can do it in Excel itself. But those days it was not that much popular. So we have to take manually. Okay, but now balancing of ledger is anytime possible. Trial balance anytime possible. So what I'm telling is we can take it anytime, but cash account should be balanced regularly. Otherwise, one fine morning, cash available in the company and cash available in the cash book or cash account, ledger account. If there is a difference, who is responsible? Cashier is responsible. Or if it is only cashier and accountant together, only one person means the accountant is responsible. So that's a problem. So you have to regularly balance the cash book. In banks, they will do every day before leaving the bank. Anybody is working in bank? Before telling something, I would ask. No, otherwise you will tell no, sir. Okay. So before going out of the bank, you have to balance it. Otherwise, of course, they are allowed to take how much ever is extra. At the same time, if there is any shortage, they have to only pay to the bank. It won't happen in today's environment. Everything is captured in the ERP. Okay, so you have to balance. This is called balancing of ledger. Okay, and then if you are not balancing correctly the ledger, trial balance will not tally. So like that, people like me, you have to sit and see one by one. It's very big problem. But today it is ERP taking care. Are you able to understand this cash book? Two things. One is how do we post it? Another one is how do we balance it? Simple. It's very, very simple mathematics. Plus, minus. That's all. But how do you bring that items in the debit and credit? That needs little bit of accounting. That's also simple. Debit side, what is there in the journal? If it is a cash account, if cash account is in debit side in the journal, what is in credit, that you take it and bring it in the debit side of the same ledger. What you have done now. Let us prepare one more account.
Yes, sir.
Oh, sorry, I'm sorry. Which account? Which 50,000? This is over. This is done. 2, 3, 4, 5 items are there. 5 entries are there in this. 2, 4, 5 entries are there. No, over. Okay, I think you are talking about something else. Oh, that is bank account. Yes, yes. Yeah. Okay, next, can you prepare the next account? That is bank account. Bank account. Okay. What are the entries are there in bank? Go to the journal. There is no bank here. Second one is there. Bank account is in debit side. So I have to go to debit side of the bank account ledger. Debit side of the bank account ledger. Yeah. To cash, how much? 10,000. Look at this 10,000. This 10,000 comes here. Okay. Next one. Yeah. To capital.
Capital.
50,000. To capital. 50,000.
In the. It's
Yeah. We are withdrawing the cash now. So that is by cash account 20,000. Withdrawing 20,000. So now the difference is 40,000. By balance carry down. By balance carry down. 40,000. That is coming for the next month. Now in the bank, they are giving you bank statement, no? Or they are giving you passbook. In the passbook, as on today, the closing balance, cash available, balance available, closing balance should be 40,000. If it is not so, there is some fraud or there is a mistake. You have to prepare a bank reconciliation statement and you have to verify the difference between the bank account of our company and the passbook maintained by the bank is having the same logic of differences. If there is no matching in the bank reconciliation statement, there is something fraud happened. Somebody withdrawn money from our account without accounting, without recording, or somebody deposited money, we did not record that. That could be a reason. Next account. What is that next account? Capital account. Capital account. Go to the entry. First entry is capital. Credit side is there. So buy cash. Yeah, buy cash. How much?
1 lakh.
1 lakh. Is it too much or 1 lakh? Yes, 1 lakh. Next. What's the next entry? One more bank is there. Correct? No. Bank. Yeah, look at this. This bank is there. Buy bank. Buy bank 50,000. Nothing is there in the debit side. Okay. So credit side total is 1,90,000. So 1,50,000. Okay. So balancing fee will come in the debit side. To balance. No entry also in one side, we have to take the balance. Balance carry down. 1,50,000. Okay. This is how you have to prepare the ledger book. Yeah. Okay. Any doubt in this? We are doing with less number of entries, same logic for any number of entries. Okay. All right. So next account is purchase account. What is happening in purchase account? No, yeah, it is here. Debit side it is there, so 2 cash. In debit side 2 cash. How much? 80,000. Okay, 80,000. I'll write it here now. 80,000. And then what else is happening? One more purchase is there. To X Limited. How much? 1 lakh. Okay, only 2 entries are there. If any more entries are there, I'll write it same thing, same logic. Now buy balance. $1,80,000. Okay. Last account is X Limited. X Limited account is to be prepared. The last ledger account, X Limited account. Yeah, X Limited account. Check in the journal. X Limited. Yeah, it is here. It is in credit side. So by purchase account, I have to go to credit side. I write by purchase. For how much it is? 1 lakh. 1 lakh. Any more X Limited? Yeah, we are paying cash. We are paying cash. So it's in the debit side. So 2 cash. $2,000. 10,000. What is the difference? To balance carry down. Okay. To balance carry down. All right, done no? Now we have to do which one? Trial balance. Like this, how many transactions are there? How many entries are there? You have to check. Based on that, how many accounts to be prepared? You have to record it. You have to finalize it and you have to prepare it. Okay, next trial balance. What's the format of trial balance? Particulars. Name of the, sorry, okay, particulars means name of the account. Okay, and then debit, credit. Yeah, you can have ledger folio number. LF number. Now, how many ledgers we have? How many ledgers we have is not a matter. How many ledger has a balances? We have to bring it here. But in our case, all the ledger account has balances. No account is closed. Which account can be closed? That's okay. 00 is called closed. But when that will happen? If you're buying something from vendor, if you settle full amount, vendor account will be closed. If you sell something to your debtor, if you collect all the money from debtor, his account will be closed. Okay. So now we have 5 accounts. 5 or 4? 5. Okay. What is the cash balance in the ledger account? 20,000. Which side? It is in CD is in which side? CD is in credit side means you have to write the opposite. Where is BD? That side you have to write it in ledger. Meaning which side is more actually? In this cash account, which side total is more? Debit side total is more, so I have to write it in debit side. Okay. Bank account. Bank account total 40,000. Debit side 40,000. Then, yeah, capital account 1,50,000. Credit side. Sorry, capital account 1,60,000. Capital account is 1,60,000 now. 50 or 60? 50. Okay. 1,50,000. This is bank 40. 40 no? Okay. And then what else is there? Purchase. Purchase how much? Purchase 1,80,000 no? Purchase 1,80,000. Debit side 1,80,000. And then X Limited 90,000 no? 90,000 is X Limited. Which side?
CD.
Now take the total.
Mhm.
This is the total. This is how trial balance will tally. Why trial balance is always having same amount of debit and credit? What's the reason? Yeah, why? That is one. Yeah, each and every debit is having its own corresponding credit. Whatever you told, I'm telling in the accounting language. Okay, each and every debit is having its own corresponding credit. Why it is having? Why each and every debit is having its own corresponding credit? Why? What is the logic? Yeah. What is the concept? Dual aspect concept. Dual aspect concept. We are following double entry bookkeeping. That is why each and every transaction is having twofold effect. We are recording all the two effects in the books of accounts. That's why it is equal always. Okay. So this is what recording of financial transactions. Any doubt before we move on to the next one? Very simple. We have taken. Actually, whatever is there, everything will be same logic only. You take 1,000 transaction also, it's the same logic. 10 also same logic. Okay. One thing you have to keep in mind, it's a general idea what you are studying. It will change slightly, not by principle, but by practice, depending upon the nature of business, what you are doing. The name of the account may be different. Okay, only that is. Cotton account, they'll maintain. In textile mill, they may maintain an account called cotton account. Some people, other companies, toys account. Okay, table account. A table number they will give. Tables are different in size, no? Okay, dining table, they are production or selling. They have their own, but logic is the same. Okay, we can't do all those things in the class. Even regular classes, we may not be doing it because companies are different in their nature of operations. So they devise the name of the account, but this is a broader understanding. Okay. Any doubt with regard to identifying the transaction, recording the transaction, classifying the transaction, summarizing the transaction, up to preparation of trial balance? If not, we are moving on to the next important area. Somebody may be sitting in this class or online thinking that, sir, what is this? We have paid this much of money and coming for executive MBA. Again, you are telling the NCRT same 11th standard textbook. Debit what comes in, credit what goes out. Okay. Debit all expense and losses, credit all income and gain. Debit the receiver, credit the giver. Why? But that is a basic, you have to understand. Okay. Now we are going to the next level, that is preparation of financial statement. What is the basic objective of accounting? Financial position is the basic objective of accounting. To find out the financial position. Okay, to find out the financial performance too. Okay, for this we are recording the transactions. After doing these three, we are informing the stakeholder about this. That's all. The four are the objective of financial accounting. Okay, now we have recorded it. Now we are going to find out the financial position as well as financial performance. How do you do it? We have two statements. One is profit and loss account. Another one is balance sheet. Profit and loss account, otherwise statement of profit and loss, helps us to understand how much profit the company has earned. Okay. By preparing the balance sheet, we can understand what is the position of the company now. Okay. So for preparing these two statements, what we need? Huh? Now, always 5th standard is not important. We come up to 12th standard. Now to join in the degree, what is important? 5th standard mark or 12th standard mark? But without 5th, you might have not studied 12th. So what is important now? 12th standard is TB, trial balance. Everything is captured. Only we have a snapshot now. That is trial balance. Trial balance consists of balances of all ledger accounts. Okay. So with the help of trial balance, we are trying to understand the financial statement. Okay. We are going to prepare the financial statements. Okay. With the trial balance, we cannot prepare. We need some more information about the company. What is that? Some transaction that will happen at the time of after preparing trial balance, or some transaction which has not entered in any of the books. Today only we come to know. For that, we cannot again go to journal, again ledger, again trial balance. Means I have to keep on preparing trial balance only. Okay, directly I'm going to give effect for those transactions into final accounts, financial statement, either in P&L account or in the balance sheet accordingly, as the case may be. Right. Those informations are called technically as adjustment. Adjustment. Okay, raw transaction which have not been entered into any journal or ledger or trial balance. Okay, that's called adjustments. Adjustments need to be entered in two places. Adjustment item, adjustment entry or adjustment data should be recorded in two places. Why? Because of dual aspect concept. If you return in this journal, you would have written in two places. Bank account debit to capital. We are writing in bank account also, capital account also for the same transaction. Okay, but that has not done. Directly it is coming to final stage. So we have to record it in two places. One you have to keep in mind. Another one is trial balance. In trial balance, whatever the items are there, we have to classify them into 5 basic categories. That 5 we already studied in the last class. What are the 5? Yep. Equity, asset, liability, income, expenditure. Whatever you see in the trial balance, that should be of any one of these 5 category only. All right, 5 only. If it is income and expenditure, you have to take them to profit and loss account. What I mean by take them to profit and loss account, we have to record them into P&L account in order to find out the profit or loss. Clear? If that is equity, asset and liability, means we have to record them only in balance sheet. This classification, this clarity you should have first. I'll supply you the trial balance. One by one, you have so many items. You read one by one. That time itself, you have to make your mind, okay, this item should go to balance sheet. This item should be recorded only in profit and loss account. How do I know? I already told you there are 5 items, 5 broad categories. One is equity. It should be recorded only in balance sheet. Another one is liabilities. It should also be recorded in balance sheet. Assets, it also should go to balance sheet. The left out 2, that is income and expenditure. If any item you find in the trial balance and that is in the nature of income, you should undoubtedly first set in your mind, it should be recorded in P&L account. Similar case for expenditure also. After that, The format is there. Where should we record it? I decide where to go for this vacation. Bangalore, decided, or Delhi, decided. Then you have to decide what are the places you are going to visit in Delhi or Bangalore. First, you have to clear. Sir, this, yes, this vacation is Delhi. That's all. Finalize that. 5 items. No, sir, I'm not able to finalize. Then problem. You have to spend your vacation in your home only. You cannot move out. Okay, that 2 years are gone. No, now we have to plan for our vacation. Right. So come back 5 items. I'll do example for this 5. Equity. What's the example for equity? This word will not be there in the trial balance. Directly, it won't be there. Subheadings of that equity will be there in the trial balance. Okay, let us have one look in this trial balance. What is the first one? So is it coming under asset, equity, liability, expenditure, or income? Undoubtedly it is asset. So it should go to that way. You have to identify. Next one, capital. What is this capital? Equity. It should go to balance sheet. Next one, bank is a asset. Bank account is an asset. It should go to balance sheet. Next, purchase is a liability. Expenditure. It should go to P&L account. Next, X limited. X limited can be expenditure. Why you are telling one person as an expenditure? A person can be an asset or liability. My employees are my assets. In employee, May 1, they will tell you. Okay, May 30th, they will tell you my employees are my liability. I have to pay you salary. Outstanding salary will be there. Okay, in that case, X limited can be either or liability. In the, how do I find out? Now you go back the table I showed you know. Asset will be in which side? Debit side. Liability will be in credit side. Now X limited is which side? Credit side. So it is a liability. That's all. In that we have to make out. Suppose commission is there in the trial balance. Commission. But the amount is in credit side. Your answer still the same? Commission is there in the credit side, 2000 rupees is there. How do you identify now? Commission is either expenditure or income. That's it. There is no doubt on that. Now we have to go with the side. Debit side is expense. Credit side is income. Now I told you commission 2000 is in credit side. Then it's an income. Okay. Interest. These are all common terms. If there is given, received, or paid, clear. We don't want to apply this logic. But nothing is given. In the trial balance, you are having an item here, interest. 6th item is just interest. Interest can be paid one also, interest can be received also. How do I know that? I have to see by side. If it is given in the debit side, I have to confirm that it is a expenditure. If it is given in credit side, I have to confirm as income. That's the logic. Okay. Now, based on this logic, we have to prepare profit and loss account and balance sheet. In profit and loss account, we are going to compare the income with the expenditure. We are going to subtract the expenditure from the income. If anything is in excess, that is called profit. If anything is in short, that is called loss. This only you are going to do. Okay. In balance sheet, you are going to take the total of assets and you are going to take the total of liabilities and equity separately. That both should be equal. That's all. Okay. This is what you are going to do. Now, all of you take your mobile phone if you are having with you. If you don't mind to switch on your data, switch on. Yeah. Go to Google. Any company of your likes. Any company or anybody is working in listed companies here? Listed companies. Nobody? Sorry? Okay. Tata Motors. Go to Tata Motors. Download the profit and loss account and the balance sheet of Tata Motors from their own website. From their own. If you want to ask me about me, you have to ask me only. If you go and ask others, they will tell something wrong, extra. something like that. So go to Tata Motors and download their financial statements for the latest year. Latest year means 2021, right? Yeah. Those are online. Please use your laptop or your mobile. Download the annual report or the financial statement. Financial statement is a part of annual report. Okay, are you able to get it? It is compulsory for all the listed companies to display or to just give it in the website, their annual report. It's compulsory. Publicly traded companies should publish their annual reports. Is it available? Have you taken page number? Have you downloaded the annual report? If so, what is the page number for your financial statement?
154.
Sir, 154.
54.
Okay, 154. You are finding the balance sheet and the profit and loss account. Yeah, all of you are having the same page. 154. What is there, sir? Balance sheet should be first. Second will be profit and loss account. So what we are going to do now is, we are going to understand the format of financial statements. That is income statement or profit and loss account and the balance sheet of limited liability companies. Those who are BCom, those who have done BCom or BBA, please listen very carefully. You have to do the problem only in this format, what we are going to learn now. You have already done your BCom, you have done your profit and loss account, all those things will not work out here. Why? I'm telling you, Companies Act 2013 is giving you the format in which the companies have to prepare the profit and loss account and balance sheet. You might have studied in your school or college in BCom, the normal T form. What is T form? T form is nothing but the ledger form. Just now we discussed now. The ledger, debit side, date, particulars, general folio number, amount. Similarly, other side also. That is called a T form of account, ledger account. In ledger account form, T form, you might have studied account form, you might have prepared the profit and loss account and balance sheet. But here, you should not follow that format. It should be like this only. So please, we'll write down now and we will learn in the next class how to prepare it. Okay, I repeat again. While preparing the profit and loss account and balance sheet of a joint stock companies, we should not just only follow the principles of accounting, but also we have to follow the Companies Act. They are giving you some guidelines how the profit and loss account should be displayed. I mean, should be in the format. What format to be followed? That you have to definitely follow. Otherwise, that account cannot be accepted by ROC, Registrar of Companies, SEBI, stock exchanges, all will not accept. Okay, so you have to follow this format only. I already told you last class, 2 accounts are prepared. One is for Income Tax Department, another one is for Companies Act. This is only for Companies Act. This is called book profit. Whatever we are getting, this answer, last answer is called book profit. That will not be accepted by the Government of India through Income Tax Department to collect tax from you. To collect tax, we have to prepare another financial statement according to their rules and regulations. Some expenditure I may take in the Companies Act, that they will tell, no, this expenditure cannot be considered as an expenditure. Don't do that. More than 25,000 rupees or more than 5,000 rupees, if you do it in cash, they will disallow that expenditure. You cannot show that as an expenditure in the books of accounts. Okay, there are some differences. So don't worry about Income Tax Act. We are not studying about that. We are studying only Companies Act. So we have to follow the format. All of you take it. Profit and loss account or statement of profit and loss. Statement of, if you say statement, you have to say statement of profit and loss. If you say account, profit and loss account for the year ended. Profit and loss account or statement of profit and loss account, statement of profit and loss for the year ended. Dash. That year ended maybe 22, 21, 20, any year. 31st March, some year. Okay. Now we are having the format with you. Can anyone read the first sentence in the Tata Motors profit and loss account? Is it format? Serial number? Is it there? serial number, particulars, note number, amount for the current year, amount for the previous year. Okay, we take only 1 year, because if you know for 1 year, you can do it for any number of years. Okay, write the format, serial number. Okay, the heading is profit and loss account. Serial number, particulars, note number. Okay, note number, then amount. Okay, so the first one is revenue from. What is the first one? Are you able to see that or not? Revenue from operation. Somebody told me already, page number 154 something. I'm not sure, somebody told. Yeah. Maybe you have downloaded some other document. No, there are, that's what, different, they might have given only one document that may be having only financial statement. So in that page number may be different. You downloaded annual report, madam? Yeah, annual report. Okay, forget about the page number, what they are telling. You just type in the control F, profit and loss. It may take you there if it is. Okay, profit and loss statement or profit and loss. There are so many places that word may be there. Statement. Okay, the first one is Roman letter 1. Operating, revenue from operation. Yeah, revenue from operation. Those are not able to find out, just write it. Later you can check it. Revenue from operation. What is this revenue from operation? Where you can find it in the trial balance? Revenue from operation is nothing but sales. Revenue from sales. Okay, point number 2. Point number 2 is other income. Other income. Or they may be having one more item, I think. Other revenue from operation, right? Other operating revenue. Okay. We write only one. Revenue from operation. Another one is other income. Other income. Other income. What we are learning now? We are learning the format in which we have to prepare the profit and loss account. Okay. Other income. What is this note number? Note number is nothing but the working note number, what you are giving for the entire amount. Suppose revenue from operation is showing 1 lakh. How much is there? I think too much will be there. The big company, no? Some crores will be there. How much? Readable. What is the revenue from operation for that company? Any 1 year? 43,000. 2022. Okay. Okay, 2020 crores. Okay. How you got that amount? How? What is the breakup of that amount? That should be shown in the working note. How do you prepare that? From the trial balance, I will collect all the items relating to revenue from operation. Suppose in academics, we have only one sales, but in practice, sale of 4-wheeler, sale of 2-wheeler, maybe something like that. Okay, any division. If anything is there in trial balance, you have to accumulate all those things in a working note. That note should be given a number. That amount should be brought in this amount column. And while giving a note number, you have to give the note number 1 to the balance sheet first item. Okay, last item in the balance sheet is a 15th note number. Then revenue from operation should be note number of 16. 15 is the last note number given for balance sheet item. The next item is P&L account. Actually, balance sheet is the first item, first document. Next one is P&L account. Okay, in the balance sheet, how do you find out equity? For equity, balance profit loss account is a working note. It's kind of like that. What is equity? How much I introduced capital, how much I earned profit. Both put together is equity, right? Please listen. Later you can see that document. Understanding is important. You are introducing a capital of 2 lakhs. You have earned 2 lakh rupees in the process of 1 year business. So your total capital will become 4 lakhs. How did you get that 4 lakh is to be explained in note number 2 or note number 1. For note number 1, the sub note is P&L account. But we cannot do like that. We will prepare P&L account first and we'll take this figure and add it to the capital and we'll bring the surplus or the equity. Okay. So you have to give note number 1 for the first item in the balance sheet. What is the last note number? Depending upon your balance sheet items, the very next consecutive number should be the first number for revenue from operation or first number for the P&L account. Suppose in balance sheet, you have 15 note numbers. What is note number? Working note number, that's all. 15 working notes are there for balance sheet. Completely done. 16th number should be given for revenue from operation. Suppose in balance sheet, only 11 numbers are there. That's it. Concept is that. Okay. So now next other income, then you have to take this total. If you take this total, it's becoming total revenue or total income. Sorry. Total income. Yeah. Total income. Okay. This amount will be total income. Okay. All right. So next one is expenses. Expenses. You have to minus all the expenses one by one. We have total expenditure. Many expenditures are there in the trial balance that need to be grouped into some category. First one is cost of material consumed. Is there? Yeah, cost of materials consumed. Yeah, what is that? Okay, that and all, don't worry about it. The company is having an international market. So hedging means, since you read it, okay, hedging means adjusting your risk against the, sorry, safeguarding your position against the risk. Hedging. Suppose I am selling cars in the international market, or I am buying some raw material from international market. I am supposed to have some exposure to exchange rate of risk. What is exchange rate? Now Indian INR is coming down only. Always coming down, but it's coming down now little too much, significant manner because of this oil and all. Okay, so we have a problem. Suppose I have some exposure to foreign market, my payment and my receipt is having some kind of risk to exchange rate. Suppose there's a contract, $100 is the price of 1 unit. When the contract is done, my Indian rupee may be 72. Okay, now it is 74. If I'm receiving, okay. If I have to pay $1, I have to pay 72. I am thinking, but today it is 74. I have to pay 74 rupees to settle the debt of $1 in other countries. So that kind of risk is called foreign exchange risk. If you take finance, you will study later in detail. Now, only one point because we touched upon that. To avoid this risk, what is the risk now? 2 rupees is going to be more for me. 72 was my expectation to pay, but I'm supposed to pay now 74. I don't know. Okay, so at the time of entering into the contract itself, with someone else, I will enter into a contract. I will give you 72 rupees. You have to give me $1 on May 1st. Today only I'm entering into a contract. This is called hedging of my risk. Now, on May 1st, my settlement date to a firm from which I am buying some raw material, I have to pay $1 to him. May 1st. Today, 172 rupees is the price. I'm entering into a contract with a bank or with any foreign exchange dealer or anybody, even common public can also take place. Okay, so I'm entering into a contract. 72 rupees you have to give me. I will give you. You have to give me $1. If he's agreeing, I am locking myself for a price of 72. I can just go forward for fixing my price to plan everything with the amount of 72. Even if it is May 1st, the price is, dollar value is 74. I don't worry. Because I give 72, he will give me $1. That I will pay to my vendor. You may ask a question, sir, in May 1st, if the dollar value becomes 68, you are going to lose 4 rupees. Yes, true. But my job is not to trade in currencies. My job is to manufacture four-wheelers or manufacture something. I will concentrate only on that. For that purpose, hedging is coming. We don't want to go that much now itself. So we just go with the accounting. Okay, leave that. You take cost of materials consumed, point number A or 1. Okay, well, how do you calculate cost of material consumed? Opening stock of raw material plus purchase of raw material plus expenditure on purchase of raw material minus closing stock of raw material minus goods returned to my supplier. Goods returned to my supplier. All these things, if you do, you will get some amount. That amount is called cost of materials consumed. I'll repeat it again. Opening stock of raw material plus purchase of raw material plus any expenditure on purchase of raw material minus purchase return minus closing stock of raw material. If you do this, you will get one value. That value is called as first item of expenditure. That is called cost of material consumed. You have to write there. And how do you arrive this? You have to prepare a note and you have to write the note number also there. Okay, next point number B or point number 2. Purchase of product or purchase of stock in trade. But don't confuse. First one, purchase of raw material. I told you to add with the opening stock. Now this is separately written. That is called purchase of stock in trade or purchase of product. What is this? The manufacturing company will not have this. If the company is only manufacturing, they won't have this second item. They will have the line, but they won't have a number value. Okay. If the company is trading company, they buy the product, just like that they will sell it. That is called merchandise, or that is called stock in trade, or that is called product. I buy car, I don't even do anything. I just display it in my showroom, I'll sell it. If you are buying that kind of any item, that will come under point number 2, which is called purchase of stock in trade or product. Point number 3, change in inventories. Yeah, change in inventories. Simply you can write change in inventories. What is called change in inventories? Except raw material opening and closing, all other inventories, you have to add all the opening minus all the closing. That will give you the change in inventory. Change means the difference between opening and closing of what? Of all the items except raw material. What is all the items? Opening stock of work in progress, opening stock of finished goods, opening stock of product. Opening stock of product, these 3 minus closing stock of all these 3. It can be finished goods. Sorry, finished goods also. Work in progress, product, finished goods. Okay, these 3. Okay, next closing of these 3. It can be minus or plus. The answer can be plus or minus. You have to write with a symbol, with a sign. Suppose opening is 70,000, closing is only 50, so it is going to be 20 plus. Okay, otherwise if it is other way around, opening is 50, closing is 70, it will come minus 20. You have to write just like that in minus 20. In the column you have to write minus 20,000. You have to give importance for sign. Okay, next. Any doubt up to this? No. Where you are getting all this data? Now, where you get all this data? I'm telling opening stock, closing stock, that these many things I'm talking about. Why you want to go to ledger? Trial balance. And if it is not there, adjustment. Some information they will give you. Point number 1, closing stock of raw material at the date of 31/3/2020, this much they'll give you. Okay, next point number 4, employee benefit expenses. Employee benefit expenses. Next one, employee benefit expenses. Employee benefit expenses. Under expense column, we are writing all these things. Cost of material consumed. Second one, purchase of, not raw material, purchase of product or purchase of stock in trade. Stock in trade or product, which you are buying, just selling that item. Next one, change in inventory. Change in inventory. Next is employee benefit expense. Next one, next one is finance cost. Am I right? Finance cost. Next, what is finance cost? The interest paid by you, bank charges, or bank has fined you something, you given a check. Nowadays, there are so many expenditure bank is taking from us. You are having 10,000 rupees in your account. At 1 week later, it will be 9,000. Why? Minimum balance is not maintained. They will tell you something. Check you are giving, or EMI, bouncing of EMIs. We have GST also on that, and again surcharge. It says everything is put together. They will be charging something. Okay, forget about it. Anything which is of that nature will come under here. Mainly interest paid, debenture interest on loan. Which one, sir? Processing charge, bank charges. Okay, all bank charges. Okay. Next, depreciation and amortization. Depreciation and amortization. All depreciation and amortization, minus in the fixed asset, minus in the intangible fixed asset. That will come under here. Suppose there is a machinery, 10 lakh rupee. Management has taken a decision in the adjustment they are giving you. Depreciate the machine at the rate of 10%. So 1 lakh machinery means 10%, 10,000 rupees. The 10,000 will go to this column called depreciation. We have to prepare a note also for that. There may be 4 or 5 assets. Each asset has some amount of depreciation. Calculate it, total it, and bring it here. What is amortization? Reduction in the value of intangible asset. Suppose there's a trademark. In the trial balance, there's a trademark, 1 lakh rupee. Adjustment they're telling you. Management decided to depreciate, a write off 5% of trademark. So 5,000 you have to take and write it here. You have to add with the depreciation amount. Okay. Last one, other expenses. Am I right? Other expenses. Okay, we don't want to include that. What is that, madam? Product development and okay, they have some nature of that like that because they are always doing some invention. No, motor companies always they cannot bring 4-wheel and they tell it is a bike, it's a car. They have to do some kind of modeling, innovation, and all they are having. But in general, we don't want to include that. We have this one. Yeah, madam. Yeah, foreign exchange. That's what I told you previously that we are keeping aside. Okay, hedging and all will not include. Okay, I told you this is general format. It depends upon the company. Suppose if you go to a bank, they won't have this format. If you're going to insurance company, their format may not be like this. It's a general, very general format. Okay. In addition to this, we may add something based on the nature of the business organization. Suppose a company which is producing material in India and selling it in India only, they may not have foreign exchange. So I am assuming like that. Okay. Next, we have to take the total of all these things. That's called total expense. If it is considered as 4, total expense. Okay. Total expenditure. So next one, net profit. Sorry, profit before tax. In your format, there will be some extraordinary something will be there. Don't worry about that. You just write profit before tax minus tax, provision for tax or tax. That will be profit after tax. So this is the format what we have to follow to prepare the profit and loss account of a company. Any doubt in this? This is a format, this you have to remember. This you have to keep in mind. Whatever is very simple for you. Whatever question is given, this is important. This is to be there. Okay. Irrespective of the question. In India, any company has to prepare profit and loss account. This is the only format. Maybe one or two items additionally added depending upon their companies. But in class, I mean, in exam or in class like this, we won't have that kind of complexity in your profit and loss account. Okay, it is simple. So this is the format. It's very, very simple compared to your T form of accounting. In T form accounting, debited, credited, like that, and we always use that. But here, there's nothing called debit, nothing called credit. Only a statement. Plus, minus. First two items are added, and again 6 items are added. The total of six item is minused from the total of the first 2 items. Again, one more item, tax, is going to be minused. Remaining is profit after tax. PAT, profit after tax. That's it. Any doubt? So I request you to just go through this annual report. If you downloaded the annual report, whenever you are free, or whenever you just have some boring, you just open this format and go through this. Maybe 400 pages will be there. If you download the real annual report of the Tata Motors, it's a very good and decent company. You can go through, all compliances will be adhered by this company. Okay, you can go through, just an idea. Okay, one of the components of annual report is financial statement. You can see, no need of working out some values there. Just at a glance, you go through what is really a financial statement. You go through. While coming for next class, like similar to this, balance sheet will be there in the same format, in the same file. You copy that balance sheet also. Copy the balance sheet. Okay, equity share and then preference share, something like that, up to total will be there. You copy that and come. We'll work out one question or 2 questions based on this format. Preparation of financial statement. After that only we have really interesting as well as very important topic, that is financial statement analysis. We are preparing now. After that, analyzing. For analyzing, we have data like this. Now we are having a data for Tata Motors with you. We can take the data and we can analyze, and we have to tell whether Tata Motor is doing good. Profit or not is very simple. No, already the amount will be there. No, some crores will be there or some loss will be there. That is easy. But are they getting enough profit or not? Or are they getting loss? Why? Which area is to be improved? What is their market condition in today's world? Okay, what is the share price of Tata Motors? What is the share price of Tata Motors? Anybody is having Tata Motors share with you? That range
Around
only?
500.
Around 500 is 435. Okay, the same. 500 and 435 is around same only, no? 435, no problem. So you have to really work on that. That is very interesting actually. That is fully mathematics. We forgot about this debit credit. Even now, when the statement is there, there is no debit credit. Okay, so we have to work on analyzing, trying to fix relationship between one variable to, look at my statement now, variable. That means purely mathematics, statistics. We have to go in that way. Okay, so any doubt before we close it? Another 5 minutes, if you are affordable. Anybody, those who are online, any doubt? Okay, I'm so sorry. I have to hold you for another 5 minutes. I did not tell you about the assignment. Yes, I thought of telling it. I don't know, somehow we are deviating. For that class, exactly 3 hours it was over. No problem. I will take 5 minutes only to to tell about assignment. Assignment is visible in the LMS. Yeah, it is visible. Can anyone just take it and read it fast, quickly? Anybody? Because that is very important. Last, we have to get assessment right. We have to get the mark. Keep on learning is not good. We have to pause and test ourselves whether we learned it correct or not. Yes, sir. Is there? Can you explain what it is? Or, oh, for you, he's only just reading for you, but assignment you will only do now. Yes, sir. Anybody quickly? We have no time. Or it is okay means fine. You are able to understand from the sentence given there. I'm okay. Anybody can loudly read it? Those who are online, can you read it? Anybody? Because it will come in the speaker, so everybody can understand. In LMS, sorry, yeah, LMS only, no? Correct. Yeah. Yes, madam. Those who are online, somebody is trying to read.
Just checking, sir.
Not for us only. Yes, she's telling such checking. Yeah, yes, sir. Mr. Surya successfully. Okay. Okay. Yes, yes. Listen. 1 second. Yeah. Okay. 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 So totally how much is there? 1 crore? Yeah. Totally 1 crore is the capital. Mm. 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 Okay. Mm. Mm. So it's a trading company. So you have to take the transaction only based on that logic. Only suppose you're writing purchase of raw material, then you are deserving for getting 0 because the company is called trading company, no raw material. Yeah, you are asked to bring one name for the company and describe what that company is going to do. Okay. Based on that, I can assess the transaction what are going to write further. Suppose you're writing buying and selling of garments, but inside you written something purchase of paint. Okay, maybe for painting your asset, it's okay. But for selling, if you're buying a paint, then you are going to get 0. Yeah. 21. Yeah. So generalizing your job is to identify 50 transactions. Yeah, our own is correct, but you are having freedom. But that freedom is subject to some framework. So the preambles are as read now. Based on that, you have all freedom to have your own transaction. Yes. Generalizing the transactions. Ledger accounts. Okay. And then trial balance. Okay. Anything? That's all. So it's simple actually. Framing your business, making some transactions on your own. For that 50 journal entry and then ledger and trial balance. Be careful about the transactions. Don't make independent transaction. Ravi, Raju, Usha, Ramesh. I know many 50 names are. If you make 50 names, your ledger account will be 50. That's okay. That is appreciable. You are working more. But all ledger account will have one entry. That looks very odd. Okay, no company will have. Prepare a vendor list. Prepare a customer list. Have vendor of 3 or 4 or only two? Sir, I translate only with 2 vendors. No problem. You finalize the 2 vendors. Customer, I have only 5 customers, sir. We are B2B businesses. We are buying from the manufacturer and selling to vendor, not customer, the vendor, another vendor. I am just a B2B business organization, business to business, buying from a business, selling to another business. Simple. So only 3 vendors or 3 manufacturing companies as my vendor. 5 companies are my customer. Only with them purchase and sales will be there. Okay. Remaining, you just assume logic should be there. 1 crore is the balance amount in the beginning. 1 crore, if I'm not wrong. Check it again. Suppose your trial balance is having a total of only 20 lakhs, means you are good in accounting or but not good in utilizing your fund. That also you keep in mind. Okay. So that's only an indication. You can have 50 transactions minimum. If you want more, 5, 10 is okay, but not more than that. That is not there. It's only 50 is given. So you can follow that. Preparation of journal, ledger, and trial balance. Any doubt in this? It looks simple. Yeah. Any doubt? Your class is doubt-free class. Actually, that's good. Actually,
Sir,
but I want, yes, sir. Yes, sir.
This,
Yes, sir. Please, please. Anything is there?
the assignment is the individual one, not
Good. It is individual. It is written there. Yes, it is individual. You are having so many groups. Hello, sir. 1 second. 2 more minutes. Right. Right. He's telling we'll go like that. Meaning, you are having so many groups in for assignment for other class. I'm seeing in the WhatsApp, but we don't want to have group again. So we can have individual assignment. Individual. Accounting is individual. You cannot make.
okay, sir, thank you.
Yes, sir. Both. Yes, yes, yes. Both assignments. Even final exam also is individual. And one more thing. You have to submit it by 2nd, 3rd of April. Okay, I have told them 2nd. They have given 1 more days for you. So 3rd of April. Okay, 3rd of April. And then again, one more thing is PDF file only you have to submit. You can write it manually. You can prepare manual assignment, just like traditional one, or you can make it in Word file, or you can make it in Excel file, or you can make it any other platform which you are comfortable in, PageMaker or Corel, whatever it is. But finally, when you are coming to me in submitting in the LMS, it should be in the readable, aligned, proper aligned PDF file only. Okay. Suppose journal, you are having 5 columns, 2 columns in first page, another 2 columns second page, 1 more column in the last page, amount column. That much capacity or skill I don't have to match all those things and verify your assignments. Please don't trouble me in that way. If so, then you will be having a trouble. Okay. Don't trouble the teacher for not getting a trouble for you. Okay. Simple logic. You make it very easy format and submit it in the same format. Because in Excel sheet, if you make a PDF file, sometime it happens. Okay, alignment problem. So that should not be there. It cannot be readable. You might have done exactly everything correct, but you'll be losing mark only because of this formatting. That's not good actually. But I don't have any other option. I can't combine and see it. Any other doubt finally regarding assignment?
Sir, there is a question.
Yes, madam. Yes, madam.
Write down minimum 50 transactions that might occur during. So we have to assume the transactions and we have to write down, right?
Yeah, not just blindly assuming. Based on the logic given in the first paragraph, you have to assume. And you are naming your business, naming your company, and naming your, describing about your business. That description and the name of your company should be reflecting in your 50 transaction. I hope you're understanding what I'm saying. Yeah. Anything else? I think that's all. Right? If any more doubt is there regarding assignment, you can call me, you can WhatsApp me, or you can mail me also. Okay. Don't wait for the next class. That is on 3rd, I think, 3rd or 4th, or maybe 1st, 5th. Okay. Don't wait up to that time. Sir, I have a doubt in the assignment. I could not download my assignment question where I can download. That kind of question don't bring me on the last date overdue. Okay, please do it. Start from now onwards. Any doubt is there, you can ask me, and you can form your own group. You can work on group, but submitting is separately. You can have your own assignment. Discussion is fine, but after discussion, there should be 3 members in a group, means 3 I'm entering the word distinct, unique assignments should be submitted. Concept can be similar, but unique numbers, transactions, everything. Format cannot be unique. It's same only. Okay. Thank you so much. See you again. Yeah.
Thank you so much, sir.
Yeah, thank you. Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you. Thank you.